Hello, ladies and gentlemen. My name is Greg Michalowski. September 8th, 2014. I'm going to take a technical look at the euro versus US dollar as we preview the upcoming week from a technical perspective. Before we get started, let me remind everybody that if you like or love this video, you can always subscribe to our Forex Live video channel. We're just getting started with more videos. Also, if you want live foreign exchange information during the week, 24 hours a day, 5.5 days a week. Actually, we do it 7 days. There's stuff on the weekends that you can read that would keep you informed of what you should be looking for during the week. So make sure you visit us daily at forexlive.com and put in your email address and particulars here. We'd be happy to stay in touch with you as well with any new developments that we may be going on. Okay, let's take a look at the euro versus US dollar. Start off here with the daily chart, and might as well look back at look back at the July low, look at the May high right here, and the 50% retracement comes in at the 130.16.8 level. That's 130.168 level. That's my line in the sand for this week. That's a level that I don't want to see the price move back above that level. We broke below it last Thursday on the ECB interest rate decision where they lowered rates and increased stimulus. And we should stay below that level going forward. The midpoint or the 50% retracement of this 2-year trading range, we're on the other side of it. We're on the bearish side of that range, and we should stay below that now. It makes fundamental sense, and from a technical perspective, it makes all the sense in the world for me as well. The other level that we should consider before that, I'm going to zoom in here, is the underside of this trend line. That line comes in at around the 129, let's call it 94. It might be a little lower every day as we go along this week. It will be because the slope of the line is to the downside. So we're going to look for the market to stay below that level and then stay in particularly below the 130.16 level. Again, that's the line in the stand we want to see the price stay below in order to keep the bearish bias. If it moves above that level, does it mean that the bearish momentum is over? No, it just means that there's a potential for further upside corrective moves that could take the price up to this 100-hour moving average or 200-hour moving average. I'll go to the hourly chart to show you where it could go up to this line or up to that line up there. Those are all possibilities that the market could rotate to the upside up there if we get above that 130.16 level. So off this hourly chart, I'm going to put a little horizontal line here at the 130.16 level, just to remind me this week that we should not go above this level right here. And as long as we stay below that level, all's fine in the world with me for the euro versus US dollar. Just a quick look at the 5-minute chart here, and you can see the bearishness is continuing on this chart as well. This is the move down from last Thursday's high again after the ECB interest rate decision, and the biggest correction point after the initial shock of the easing and of the increased stimulus came up to this level at 130.51.6. And since that time, if you put a Fibonacci from that high down to the low that we saw a few hours after that, the market's been going sideways here. But the corrective move to the upside, where we find resistance right against the 50% of this move to the downside. So all the sellers here still remain in control. Again, it's that 50% level, that point where it's bullish above and bearish below. So a closer resistance level comes in at the 85 level. We know the 95 level is the underside of the trend line off the daily chart, and we know that 130.16.8 level off of the that's the 50% retracement level, right around that level. Those are our resistance levels. So 1, 2, 3. That's our resistance levels. Stay below, and we get to move lower. Now, how far can we go to the downside? That's another question. If we take a look at the daily chart, and again, I'm going to zoom out, and I'm going to show you the 61.8% retracement level. There's really not a lot of resistance in here. I know we traded in there 3 times, but the market went down and quickly moved up. It went down and quickly moved up, went down and quickly moved up. So this was near the bottom area of trading during this consolidation phase right here. So as long as the this area right here down near the 127.86.5 corresponds with the 61.8% retracement. You can also probably go down to this area right here. This box right here would be where the market would find our next intermediate term support. As long as we stay below the 130.16.8 level, I would think that the market would rotate down and try to test this low area down here. So there you have it, a preview of the week ahead in trading, but looking at the euro from a technical perspective. Again, if you're interested in this video and want to see more, be sure to click on the subscribe button right here. And if you want to get more information about foreign exchange trading or about financial markets or about even some fun stuff, you can go to our website daily at forexlive.com. See you there. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.